Lecture 7. Balance Sheet Preparation. The main objective of this lecture is to describe how to prepare the balance sheet, with all its components. There is a logical order for preparing the financial statements because they build on one another. The first step in the process is the trial balance. The trial balance is the balance of all the accounts at the end of the accounting period. After the trial balance is complete, adjusting entries are made to the trial balance. The first financial statement that is compiled from the adjusted trial balance is the income statement. Finally, the balance sheet is prepared. One way of explaining the balance sheet is that it includes everything that doesn't go on the income statement. Balance sheet can be prepared on monthly, quarterly, half-yearly, or yearly basis, according to its requirements. Preparation steps. Use the basic accounting equation to make a balance sheet. Choose the date for the balance sheet. Prepare the header of the balance sheet. Running trial balance. Prepare income statement. Prepare statement of retained earnings. Prepare the asset section. Prepare the liabilities section. Calculating owner's equity and totals. You don't want to run your financial reports until you know for sure that your data is good. The trial balance report totals all of the debits and credits in the chart of accounts, to make sure debits equals credits. If income exceeds expenses, we make a profit or net income, if not we have a loss. Retained earnings are the cumulative net earnings, or profit of a company after paying dividends. Retained earnings are the net earnings, after dividends that are available for reinvestment back into the company or to pay down debt. Since retained earnings represent a company's remainder of earnings, that are not paid out in dividends, they are often referred to as retained surplus. The statement of retained earnings is one of the financial statements that publicly traded companies are required to publish, at least, on an annual basis. The calculation of retained earnings adds net income to beginning retained earnings for the period, and subtracts dividends to be paid to shareholders. The formula is retained earnings equals beginning retained earnings, plus net income, minus dividends. If a company has a net loss for the accounting period, a figure greater than the beginning retained earnings, a company's retained earnings statement shows a negative balance or deficit. Since the statement of retained earnings is such a short statement, it can be listed sometimes at the bottom of the income statement after net income. The assets section is prepared by the following steps. List all current assets. List all non-current assets, also known as long-term assets. Include any intangible assets. Add up the current and non-current assets totals, and label this amount total assets. To prepare the liabilities section. Determine current liabilities. Calculate all long-term liabilities, also known as fixed liabilities. Add the current liabilities subtotal to the long-term liabilities subtotal. Calculating owner's equity and totals. Calculate retained earnings. Calculate the owner's equity. Add the total liabilities and total owner's equity figures. End of Lecture 7. Thank you.